Hello and welcome to today's EGR Virtual Series webinar in partnership with BVNK. My name is Katie Renton, Head of Event Content here at EGR Global, and I am delighted that so many of you are able to join us for this event, which will be an operator's guide to crypto payments. BVNK are a next generation payments platform bridging traditional and digital finance so that iGaming businesses can build for the future and supporting the industry to navigate the ever-changing world of payments confidently. Today, we are joined by three members of the BVNK team to hear more about implementing crypto payments and making informed decisions about crypto payments partners, as well as hearing more about the most impactful use cases for iGaming operators. Before I hand over to our speakers, I wanted to encourage everyone watching to send over any questions you might have throughout today's presentation. To do this, head over to www.slido.com, or you can use the QR code here on the screen that will take you there right now. And on this homepage, enter the event code EGR Virtual Series. This will take you to our event page where you can submit your questions and vote on other questions that are sent in. Our speakers will get to these in our Q&A session following the main presentation. So please do feel free to send over any questions that will seek to further your understanding of today's topic. All right, that's all from me. So let's get on to the main presentation now. Unfortunately, George Davis, Chief Product Officer, is unable to join us due to last-minute illness today, but we send him our best. However, I'm delighted to introduce our three speakers from BVNK. Thomas Bloor, Director of Sales, Emma Mayer, SVP Marketing, and Rosen Metev, VP of Gaming, who will start us off today. Over to you, Rosen.
Thank you, Katie. Hi, everyone. Thank you for joining us today for this educational webinar, An Operator's Guide to Crypto Payments. Crypto payments is a topic that many of you are already familiar with. It's gained a lot of momentum in the online gaming space recently. Today, we really hope to provide you with some useful insights to help you understand how crypto payments work, mention some important factors you need to know when selecting your provider should you decide to introduce this payment method. First things first, let me introduce myself and the other speakers. My name is Rosen. I'm VP of Gaming at BVNK. I have over 13 years of experience in the online payment space, previously at PaySafe, Skrill and Neteller, as well as ex-Zofort, now Klarna. I specialize in supporting iGaming and Forex businesses in transforming payments using innovative technology. Over to you, Emma.
Hey, I'm Emma. I'm the SVP of Marketing at BVNK. I've been working in FinTech for about 8 years, and I've spent most of my career working with merchants to help them understand and utilize new technology.
Thanks, guys. Hi, everyone. I'm Thomas, the Sales Director here at BVNK, specifically focused on our crypto processing services. I've been helping operators, PSPs, specifically in the gaming vertical, accept cryptocurrency payments since 2017. Thanks everyone for joining.
Thank you, Emma. Thank you. Tom, timing-wise, you can expect this session to run for about 45 minutes, and we'll cover the following topics. An overview of the growth of payments, why merchants are accepting crypto payments, how crypto payments work under the hood, some tips on evaluating different crypto payment providers, a brief overview of BVNK, and in the end, we'll have time for an open Q&A. With that, I will hand over to Emma, and she will tell us more on growth and adoption of crypto payments. Over to you, Emma. Thank you.
Thanks, Rosen. So, as many of you will know, the leading reason a merchant will adopt a new payment method is consumer demand. And despite market volatility, consumer adoption of crypto continues to grow. So this chart overlaps consumer adoption of the internet with consumer adoption of crypto. And as you can see, the trajectory is quite similar. So today there are over 425 million people who own crypto globally. And if adoption continues at that same rate year on year, we're going to reach 1 billion users by 2025. So on top of this, a recent survey from payments.com found that 91% of people who own crypto want to pay with it. And for those who don't own crypto, 59% were interested in owning it and using it to make purchases. So these numbers are ultimately too big for merchants to ignore. which is why we're seeing mass adoption across the world's top 100 listed companies. 81% of them are using blockchain in some form. Most use cases are focused on payments. We have brands like Expedia, Subway, Microsoft, Whole Foods, and Starbucks. These are just a handful of the household brands that now accept crypto payments. But it's not just consumer demand. There's also a host of benefits for merchants. So recent research from Forrester shows that there were three main findings among merchants who offer crypto as a payment method. The first is that they see an increase in new customers. This is due to the fact that they're able to attract new first-time buyers who prefer paying with cryptocurrencies. Secondly, the purchase amounts are twice as high as with credit cards. Buyers who pay with crypto tend to spend more. And third, merchants are paying lower processing fees. I think another thing to mention here is generally there's a decrease in fraud-related chargebacks because once sent, a transaction is immutable. This means it can't be reversed or altered once it's recorded on the blockchain. So despite all these benefits, crypto payments also comes with a lot of complexity. A lot of merchants are faced with the dilemma of wanting to offer this payment method, but they lack the resource internally to do so. Understanding and enabling the technology, creating the perfect customer experience, maintaining compliance and regulatory know-how, these are all really critical things to get right. Managing risk and volatility is another factor. So like any major business decision, the key is really having the knowledge. So having a basic understanding of the mechanics and what to look for in a payments partner is really, really important to helping you on your journey. So on that note, I'm going to hand over to Tom to talk us through how crypto payments work under the hood. Over to you, Tom.
Thanks, Emma. Yeah, we thought it might be interesting to run over some basic concepts, what's actually happening technical-wise on a blockchain when a payment is sent. So this is before we start talking about how a crypto PSP might work, but what's actually happening on, let's say, the Bitcoin blockchain, for example. So it's going to be quite top level, and we'll cover some basic concepts that will hopefully be useful and interesting for everyone watching. So first slide, please. Okay, so most of you probably know this, but we're going to define it anyway. So cryptocurrency is, in essence, the thing that's being sent on the blockchain. Bitcoin is a type of cryptocurrency. USDT or other stable coins are types of cryptocurrency. The blockchain is a digital ledger that's a record of every single Bitcoin transaction or USDT transaction that has been sent between parties. So blockchains should go on from zero to the current date. They're a record of everything that's ever happened. We'll get into more detail into the next slides. Nodes and miners are the building. Well, I mean, they're the basics of a blockchain. So nodes and miners work together and fulfill different purposes on the blockchain. So nodes are responsible, or nodes are little computers, they don't have to be little, but most of them are, that witness every transaction that takes place. So there are nodes spread across the world, thousands of nodes, that all store a copy of a specific blockchain's ledger. So if we're talking about Bitcoin, for example, there's a node, there are nodes in Malta or nodes in the UK that all have the same copy of the Bitcoin ledger on them. When people say a blockchain is decentralized, this is what they mean. They mean there are copies of that ledger in lots of different places around the world. So nodes are responsible for talking to one another and making sure that they're all seeing that the same transaction is happening. Miners work with nodes together. So the role of the miner is to compete with each other. They compete by dedicating a lot of computing resources to solve a cryptographic equation. They're competing to mine the next block on the blockchain. So the block contains transactions. We'll get into this in the next slide in a second. Miners are responsible for securing the network from bad actors and spam. Basically, it's quite expensive to be a miner, which means if somebody wanted to try and do something nefarious on the network, send payments that weren't particularly accurate or real, it would be very expensive for them to do so. So it's a de-incentivization for them to do that. Next slide, Emma. So miners and nodes together. This slide is basically showing how a payment is completed with all those parties working together. A user with their Bitcoin wallet, wherever that might be, sends a request to the network to send some Bitcoin. So if I want to send some Bitcoin to Rosen using my wallet, I will send a request. That request is picked up by a node, and that node is going to check with other nodes to see if they've also seen the request. And if the majority of them agree, and they say, yes, we've all seen this, that request, that transaction is sent to a waiting area, which is called a mempool. And a mempool is where unconfirmed transactions pile up, and they're waiting for a miner to complete them and put them in a block. Just to conceptualize this a little bit for you, I'm going to share my screen very quickly. Just to check, Emma, can everybody see my current screen?
Yeah, all good.
Super. We can. So this is the Bitcoin mempool, or a visual representation of it. I won't spend a long time here, but this might be interesting for some. On the left, we can see everything that is unconfirmed. So we have at present 6,000, almost 3,000, 4,000 transactions that are unconfirmed. So these are transactions that nodes have seen and have sent to the mempool that are waiting to be put into a block by a miner. Once they're put into a block, they're broadcast to the network here. So you can see these are blocks that have been confirmed by miners. The most recent block has 2,000 transactions in. And if we click into the block, we can see a record of every single send that's taken place. So the block is an update of the Bitcoin ledger. So we can see this address sent this Bitcoin to this address. That's broadly what's happening. Thanks. I'll go back to the slideshow if that's okay. So once the miners have completed a block, they broadcast back to the nodes on the network. Here's a completed block of a lot of payments. And the nodes, again, speak amongst themselves. They confirm that they all see the same block, the same information. And provided that's the case, that block is put onto the blockchain and it's considered complete. The reason nodes are important in the way they work with this consensus is it's you have a lot of people seeing the same transaction and agreeing that it has happened. I suppose an example would be if I gave Rosen 10 euros in cash and nobody saw it, and I wanted it back, he could say, no, you never gave me 10 euros, and it would be hard for me to dispute that or prove it to other people. But if 100 people saw me give Rosen 10 euros, then they'd all say, oh, no, Rosen, we saw Tom give you 10 euros. You have to give it back. That's broadly the concept of how nodes are working to verify what's happened and what hasn't happened on a blockchain. Next slide, please, Emma. So another important concept that you'll hear floating around a lot is the concept of keys, addresses on a blockchain. So public keys, I'm going to start on the right of this slide. Public keys are addresses that people share in order to receive payments. So if I would say to Rosen, please, or Emma, please send me some Bitcoin, and I could show them an address, either in text format or quite common instead to show a QR code format. This would be a public address that I've generated. Private keys are what I use are required to access any funds that Rosen or Emma has sent to me on a public address. So I can share my public keys, my addresses with anyone. That's fine, that's safe. But my private keys, if I share them with anybody else, they can spend funds that have been received to public addresses. This concept is quite core to understand. And actually, Emma, if we move on to the next slide, explain why. It ties into cryptocurrency wallets quite heavily. Now, crypto wallet, the term crypto wallet is thrown around, and it means different things to different people at the moment. There's no global consensus on how a crypto wallet is defined. You have companies that offer cryptocurrency wallets. These are called custodial wallets. If a company offers a cryptocurrency wallet, the company is responsible for storing and managing the private keys on behalf of its users. So custodial wallets will likely, users will sign up just like they might sign up to any other mobile wallet. They might go through some KYC, they might link some bank account details, credit card, etc., and they might be able to trade cryptocurrency on that wallet as well. But they are giving ownership of their keys effectively to this company. So the potential risk to users is that if this company is not managed properly, there's a risk of insolvency. They don't have complete control of it's like putting your cash in a bank. You have to go back to the bank and ask them to send the cash out. A non-custodial wallet is where a user is responsible for looking at. They manage their own private keys. I see there's a question that popped in. Actually, I'll just we'll get to that later. To go back, a non-custodial wallet, users are responsible for managing their own private keys. Now, this means they are, I suppose, free to transact with anybody at any time. They don't need permission. They can engage with a blockchain whenever they want. There's also zero barrier for entry for anybody in the world to create a non-custodial wallet. It takes seconds, and all of a sudden you can have access to a network that you can transact in. The trade-off non-custodial wallets is that if you lose your private key, you will not be able to access your funds. So there's a large chunk of personal responsibility that comes into managing private keys. That it's like leaving all your cash under your bed. Most people prefer to put it in a bank for a reason. So the concept is interesting. There can be different types of wallets as well. So you can have wallets on your phone, the wallets on a bit of hardware, or a bit of paper. But the majority of users, it seems, at least in let's say the West, are using custodial wallets. So they're storing their funds with a company. Next slide. So yeah, where does BVNK fit in? I hope that was interesting. BVNK basically bridges these two sets of payment rails. So cryptocurrency, Bitcoin, USDT, all these blockchains, these new payment rails don't get on easily with some of the let's call them legacy payment schemes, so SEPA rails, SWIFT, etc. BVNK bridges that gap. So if a merchant's working with BVNK can engage with as much of the crypto side as they want to, or blockchains, or they can dip their toe in and still store, hold, manage their treasuries, etc., in euros on SEPA scheme and so on. So we're making the digital currencies accessible to businesses that are still very much operating in the traditional payments landscape. The reason being, most of the world still runs and will run for a long time on these systems. The whole world is not going to start using a blockchain tomorrow. So for the next slide, we thought it might be interesting to give a quick demo, gaming specific, of how an end user might top up their gaming account using cryptocurrency. I'm going to share my screen again. If I press the right button. And Emma, if you can just give me a shout when that's up, that'd be great.
Yep, it's up.
Great. Okay, so for now, I'm going to be Joe. Joe is playing on Glitch Casino, and he wants to buy Game Pass for $300 to help Gonzo on his quest. So this is me topping up $300 effectively through the cashier on the side. Joe sees the usual suspects on the cashier, but he's got some cryptocurrency and he'd like to pay with that. And so in this case, BVNK is integrated onto the cashier, and we can continue the payment. Now, Glitch Casino don't want to hold any cryptocurrency themselves. Everything they're running on the back end is in dollars. All of their accounting is in dollars, their exposure, everything is dollars. So they want dollars for this transaction. They do not want to get Bitcoin or anything else. So BVNK shows Joe a list of cryptocurrencies that he can send and the current exchange rate. So Joe has an idea before he continues how much he's going to have to send of whatever cryptocurrency he chooses to complete the payment. So here I've got Bitcoin or USDT. I'll pay with Ethereum in this demo. So I'm going to send roughly this much Ethereum, and here's the current exchange rate. So if I hit confirm, BVNK is showing the payment information. Now, cryptocurrency payments are push payments. That means we are completely reliant on Joe, or me, to send this amount of cryptocurrency to this address. So this address we're showing here, this is a public address, like we went over before. BVNK is monitoring this address to see if this amount of cryptocurrency has been sent from Joe to us. Now, Joe might use his wallet if he's on a mobile phone, scan this QR code, that might complete the transaction for him. If not, he can copy this amount into his wallet, copy this address into his wallet and send, a little bit like sending an email. Or if he's using a certain wallet like MetaMask or Binance, he might connect this wallet to the BVNK integration and complete the payment that way, which is also an option. So Joe sends the funds, and we'll monitor this address for payments in progress. Once we receive those funds, we're going to update Joe, say thank you, payment is received. Glitch Casino get all of the callbacks they would for normal payment being completed. In this case, we're saying thank you. Joe sent 0.021 Ethereum. You now have $300 in your US dollar balance at BVNK. Here's a transaction reference and a hash that Joe can check on the blockchain if he wants to follow up with his payment for any other reason. So it's quite straightforward. If there are questions on that, please put them into Slido. We can definitely run over that towards the end of the slideshow. And I'm going to go back to the slides now as well. And Rosen, I'm going to pass over to you now.
Thank you, Tom. Really insightful stuff. The benefits of working with a PSP, you can move over to the next slide, Emma, if you will. So working with a PSP obviously alleviates a lot of the overhead that you will have if you have to do all the connections yourself and maintain the whole system yourself. It's like running a payments company. So being an operator providing consumer services in the gaming space, having to provide payment service in its entirety is a big overhead. So that's why relying on the right partner and selecting the right partner is critical to refrain from having these issues, and obviously spending a lot of money on staff and operations. The maintenance is one of the important things. It's all covered by the PSP. All the changes, all the regulatory changes that we'll mention later are also responsibility for the PSP. You will be accepting the crypto payments without interacting with the crypto at all, and you don't have to be regulated in that sense. So in any case, you are not touching the crypto unless you want to. So customers will be paying with crypto, but you will be requesting fiat from them and receiving fiat in your merchant account or in your bank account. Pricing wise as well, working with a partner, you will be saving from running this business and this operation yourself, and working with a PSP is usually acceptable, and something that you can work on with your provider. Similar to other payment methods, you can simply discuss that and get the best rates possible on the market that makes sense for everyone. We can move over to the next one. So we will now discuss the options to the questions and the criteria you need to use to select your payment provider. And one of the first questions that I would personally ask is processing times. Processing time is key to the user experience, so that you can debit and credit the funds actually to the customer's account. So you need to understand how many blockchain confirmations are required so that you can actually credit the funds to the end consumer. If the PSP advertises instant payments, you need to understand from them how they manage the risk of non-settlement and the possibility and the possible liability that disposes on you as an operator. When we refer to instant payments, what we mean is completing a transaction before there is any confirmation on a blockchain. So that's what we mean under instant payments. The second question I would ask is settlement times. This is affecting directly your business in terms of liquidity and your cash flow. So you need to understand how quickly you can get the settlements, how costly is that, and how much you can save in terms of cost and in terms of time with the settlement capabilities that this potential partner has. Third place, speaking about cost, come the fees and the rates that you will be paying. Maybe some of you will ask this as the first question. It's important indeed. It is critical. So speak with your PSP about the rates. Of course, questions around the minimum commitments, around the any discounts you get on volumes. These are standard questions for the payments industry, but please pay attention to the second one. This, I believe, is a super important question to ask, whether there is any markup that this PSP is applying to the exchange rates that they are posing on the end consumers, and where they source their exchange rates from. Because you might end up in a situation where you have a very attractive processing offer, so the fees are very low and competitive, but in the background, the markup that is applied to the exchange between crypto to fiat paid by the end consumer is extremely high and not market competitive. So you may end up in a situation where you introduce a payment method, but because the cost to the consumer is so high, they will not use it. So you have spent money in integration and building the relationship, and nobody's using the payment method. So this is super important to discuss with your provider. I would also go through the operational redundancy that this partner has. It is a question you need to ask because of the continuity and the stability of the service. So you need to check whether the PSP is also having any redundancy nodes, or they rely on a single relationship. A single relationship means a single point of failure as well in our eyes. So a PSP can run their own nodes and also work with a third-party provider, the likes of Fireblocks or BitGo. So having both options will ensure continuity, the service stability. Should there be any glitch with, let's say, a partner, you can rely on your own nodes and the other way around. So that will ensure that the service is always up and running and transactions will be always flowing through, so there will be no interruption on the user experience. The 10 must-haves from a compliance perspective. Compliance and regulation are always key aspects of payments and iGaming together. So it's a topic you need to discuss with your potential partner. We would recommend for you to evaluate the resources that the partner is dedicating to compliance and regulatory work, also the experience of the PSP's regulatory and compliance team. You can even go one level more detailed when you ask how product development works with regulatory and compliance, just to make sure that compliance by design is being applied within that organization, to make sure that all products released come with compliance in mind. Last but not least, check the licensing area and the licenses and the registrations that the PSP has. And the future roadmap when it comes to regulatory. The regulatory roadmap is as important as the existing licensing network. These are questions you need to definitely ask. So the decision to take on a relationship with a partner for crypto processing goes through some must-haves, but also some nice-to-haves as well. So the nice-to-haves can help you actually take the decision when choosing between 1, 2, or 3 providers. So we have pointed out some nice-to-haves as well. You need to check whether the back office satisfies your requirements, whether you can grant people levels of access and manage that very well for your team. How is the reporting being done? How granular you can go in terms of reporting? These are all things that matter to your operational teams day to day. Check also if you have IBANs with your business account, because this can speed up settlement, can bring to efficiency when it comes to settlement. So key aspects as well, but we've placed them in the nice to haves. So in summary, the checklist that you should include when speaking to a provider should contain the processing times questions, the settlement times, fees, the operational redundancy, the compliance aspect. It's last here but not least, super important element as well. And of course, the nice to haves that will point you in a direction which provider to choose, the flexible permissions for your team, the robust reporting, whether you have some complementary service like IBAN accounts, etc. And some integrations with accounting software that you're already using. This will also help operationally and save some operational cost. So we will now have a quick overview of BVNK. We want you to see what exciting stuff we're working on. In the first slide, you see BVNK at a glance, as we like to say. We're already an established business. We process for over 300 merchants globally. And on an annualized basis, we process billions of transactions, of transactional volume. We have a team that is now over 200 people. We are located in the UK, in EU, in South Africa, an extremely talented and diverse team. We're also serious about compliance and regulation. We have a UK EMI license under the FCA. We are a virtual asset service provider registered in Spain with the Bank of Spain. And we are an authorized financial service provider in South Africa. At BVNK, we operate at the point where traditional finance and crypto intersect. So to make payments faster, secure, and globally accessible, we run 3 core products. We try to keep it simple. We have 3 core products: crypto payments, a global settlement network, and we support B2B payments. I will light touch now on each one separately. The first one is crypto payments. Tom explained extremely well how crypto payments work. He made a fantastic demo. So again, I'll reiterate, the way the crypto processing works is it allows you to accept the crypto transactions globally, 12 currencies, and you don't need to hold the balances or touch the crypto at any point. You can request the amounts in fiat. You will receive the amounts in fiat, while your client will pay from their crypto wallet using their digital assets. So should you want to refrain from touching the crypto, our service can do that for you. The second service, the Global Settlement Network. This service allows you to move funds cross-border from emerging markets in under 24 hours. We ensure local collection, subsequent settlement to your Euro or GBP bank account or to your BVNK business account balance. So you can have the funds either with your existing banking partners or within the BVNK business account. As to the BVNK business account on the next slide, that service is underpinning the crypto processing and the global settlement network. They both sit on the BVNK business account. It's a multi-currency account that supports SEPA credit, SEPA instant CHAPS, faster payments, SWIFT, and it has a dedicated IBAN to it. So it allows you to send and receive B2B payments. So that's why when you receive payments from crypto transactions, you can actually, from that business account, using the capabilities, send transactions B2B to your partners or to other bank accounts of yours. Also, you can pay in crypto, so you can send and receive crypto as well from that business account. If you want to discuss more about the business account, the global settlement network, crypto processing, and go into detail, you can pass by our booth at ICE and meet us there. Me, Tom, and other members of our team will be there. We'll be happy to spend time with you. It's N10-150 at ICE. That will be in 2 weeks' time, so we look forward to meeting you there. And now we can go to the Q&A. I think there is quite a few good questions.
Yeah, I can see. Sorry, I can take one of the. I can take the 2 questions I see right now. If that's okay. So we have a first question here. I thought a miner was only involved in producing new tokens rather than confirming transactions. So yeah, this is broadly accurate. A miner's role is to produce a block and fill that block with transactions. It is the responsibility of the nodes on the network to confirm that the information in that block is all good and proper. So yeah, miners do produce new tokens. It depends on the blockchain. There's a lot of finer detail, and this doesn't apply to all blockchains. But yeah, in general, that comment is correct. So I hope that's clear too. So nodes confirm transactions, miners produce blocks that are filled with transactions.
Perfect. Sorry, just to jump in there. So first of all, thank you so much to all of our speakers here at BVNK. I certainly find cryptocurrencies a difficult world to navigate. So it's great to sort of hear so much information from you all today. So yeah, as you said, we've had quite a few questions sent through, and thank you so much, Tom, for going through that first one there. So just going through chronologically, I'll just move on to the next one as well. So how do you make sure the person making the payment is the owner of the wallet?
Yeah, I can say happy to take this as well. The short answer is right now, the concept of identity or when sending digital currencies is not there. So what you can do with a blockchain payment is capture a lot of detail about provenance of funds. So if I send Rosen a Bitcoin, it is possible to see where that Bitcoin has been before it came into my possession and before it came into the possession of the person that sent it to me, and so on and so on and so on. So there is no simple way to tell if the cryptocurrency that's being sent belongs to a specific person, but you can definitely tell with a high degree of confidence if the cryptocurrency that you've received is connected to some illicit activity. There are services that most of you have likely heard of, like Chainalysis or Elliptic, and it is their core service to effectively audit blockchains, like tagging addresses and monitoring activity, to see where funds are going. If a fund comes into this address, what happens afterwards, and so on. So on that cryptocurrency processing example I gave, when we received the cryptocurrency payment from Joe or me, we had screened that transaction using Chainalysis in this case. And Chainalysis would have told us these funds are low risk, there is no association to illicit activity, and therefore we process that transaction. If we receive funds that are flagged as high risk, there's a process for putting transactions on hold and review, and so on. So at its core, that's it's not really something you can do, because, like I say, anybody can create a Bitcoin wallet and send funds. If, however, and this is likely what's going to happen moving forward in certain parts of the world, so Europe, for example, a proposal called the travel rule, which might work quite nicely, since the majority of users do seem to send funds from custodial wallets, is for entities that operate wallets to share identifiable information with each other when customers transact. So, for example, if BVNK receives a transaction from another registered exchange, then that exchange would include some identifiable information of the end user. along with that. But that's not a thing yet. So the best protection operators have at the moment, and many operators have incorporated this into their flows, is strict limits, careful monitoring, all the normal stuff. So if you have a VIP and they're sending significant sums, you want source of wealth. You can also confirm with on-chain analytics where the funds have been received from, let's say, an exchange where that user's been KYC'd, or if they've been received from an address with no information whatsoever. You might choose to set up criteria where you only accept transactions that have come from avenues where a user's been KYC'd, like an exchange.
Okay, brilliant. Thank you so much. So the next question that we had was about waiting times. So is there and forgive me, I think potentially Rosa might have answered this question already, but is there a waiting time if someone is buying cryptos with fiat currency?
Yeah. So I suppose the answer depends. It depends on the context. So if you're talking about buying crypto with fiat, as in just simply making a trade on the platform, then no, that's instant. If you're just talking about, let's say, you have a on Glitch Casino, going back to our example, an end user that has a $300 balance that now wants to withdraw it to cryptocurrency, would that be instant? The answer is broadly, yeah. So the US dollar to crypto trade that we perform would be instant. We would quickly screen the address that the end user wants to receive his funds to, with Chainalysis. This is pretty quick, so we're talking a few seconds there. Provided there is no risk flag that we get back from Chainalysis, then we'll process that transaction, and then we're going to broadcast that instantly to the network. We're just waiting for however long it takes a particular blockchain to complete a block or two.
All right, fantastic. So another question we've just had in and has a couple of votes on it as well. So I'll pose it to you now as a popular question. So, can a regulated casino operator operating in Tier A markets such as the UK or the US use BVNK to uphold its AML obligations? And does BVNK currently operate in these markets?
Yeah. So we are live with in some local license markets in Europe, to answer that part of the question. There are a lot of this. There is not. It's a square circle. There is not defined regulation for the correct way to or to not incorporate cryptocurrency payments into flows. So the operators in local license markets that are doing it are naturally incredibly cautious and do a number of things. First, there's a lot of legal opinions that have to be collected. There's a lot of notifying various authorities in the particular market. So this is not just the gaming regulator, it might also be the financial regulator, informing them of their intent and their proposed processes internally for how they're going to mitigate all risks potentially associated with accepting cryptocurrency. So where BVNK helps is we have a pretty well kitted out legal and compliance team that come from background in payments, gambling, and also have a ton of experience with crypto regulations as they're evolving. And the tools on BVNK side as well, it really depends on the level of granularity you want to get into. Broadly, yes, you can. You might decide to also pursue a relationship with Chainalysis in tandem with using BVNK or Chainalysis or Elliptic or another one of these service providers for some added comfort. But there is no formal tick list yet, to my knowledge, in a local license market for the correct way to do this.
Just for the avoidance of doubt for the US, If we're speaking for a US licensed operator in the relevant states, we will not provide service to a US-based company. For the UK, it's a different story. It evolves around what Tom explained, so it really depends on the local regulators for both the merchant and it might be the FCA, the Gambling Commission, etc. The US is a no. The UK, we need to discuss.
All right. Got you. Fantastic. All right. And another one then. Do you have a license for MGA markets? And if yes, does the new MGA sandbox fix known issues?
We are not in the MGA sandbox. We do not have an MGA license. It's something we're considering. We're somewhat optimistic that much like travel rules for EMI licenses, that the bloc, the EU, is going to have similar terms in the not distant future for so long as you have a crypto, like a VASP license of repute, then you can passport that into other countries in Europe. So I can't comment on the if the new sandbox fixes the known issues. I'm sorry.
No, that's quite all right. All right, fantastic. Another one here. Can you force closed loop, meaning to accept withdrawals only to the addresses used to make deposit first from the same account?
In some contexts, but unfortunately, so in some contexts, and to go into that a bit, some blockchains are what are called account-based blockchains. So Ethereum is an example of an account-based blockchain. Account-based blockchains work a bit like email, where if you receive something from an address, you can send back to the same address. If the unfortunate thing with forcing closed loop is it works when the user has created their own Ethereum address on a self-custodied wallet, but you have no KYC with a self-custodied wallet. The reason it doesn't work so well when the user has opted for a custodied wallet, so they open an account with the company, is to do with how most companies' exchanges architect their wallets. So very briefly, if you open an account with any exchange or any company that gives you that stores your private keys, inside your account, you'll see, okay, here's my Bitcoin address, that's fine, or my Ethereum address. You'll find that if you send funds to it, you'll see that address on the blockchain, but no funds are actually stored on that address. That address's purpose is purely just to receive funds. And then the business will sweep funds from that address into their treasury to manage whatever function they have to. It's also not the address that's used to send out funds from that exchange, so or wallet provider. Generally, again, for multiple reasons, security being one of them, companies will have a load of funds they hold in, let's say, offline cold storage, which is secure. Keys are not kept near an internet connection and so on. And payouts will be done from what are called hot wallets that they'll move funds to periodically and they'll send out. If you receive a deposit from an exchange or a company, it's come from one of their hot wallets. And that hot wallet has absolutely zero connection to the user account that's requested that withdrawal. So if you send funds back to it, they're not going to be credited to the customer's balance. The customer's going to have to get in touch with the customer support, share the hash and all this. So it's unfortunately not quite as simple as just saying, we'll just send it back to where it came from. You can if they've done it themselves, but then you're skipping the KYC part, which is unfortunate.
All right. Fantastic. So a more sort of general question here. So we've just got time for sort of a couple more here, but thank you everyone for sending your questions over. General question just about the kind of the crypto market. Are you seeing a drop off due to current market conditions at all?
I can take this again. Or no. It's the short answer. So perhaps an interesting stat. In general, the volumes we see, processing volumes for merchants in, let's say, euro or dollar equivalent, are either flat or increasing month on month. And it has no direct correlation to the price of the crypto asset. So, for example, a year and a half ago, Bitcoin was significantly higher than it is now, but the dollar equivalent processing volumes of a merchant are the same now as they were a year and a half ago. So it tells us that a lot of customers using cryptocurrency, maybe this is market specific, as an APM, but they're still thinking in dollar terms. So if Bitcoin's worth 10,000 this month, they'll send 0.1, and if it's worth 5,000 next month, they'll send 0.2.
I think to add to that question, to the answer, I think what the crypto volatility affects is the investment part. So if people are looking at it as an investment, yes, it affects them. But when it comes to a payment method, it's still taken up in terms of adoption. People are using it, so using it as a payment method is not being affected by the volatility. So it's the investment aspect that might be affected, but that does not concern the crypto processing element.
And which cryptos do you see the most volume in?
Bitcoin and USDT. Then this has been a trend that's existed for a few years, quite a few years that we've observed. So there are a lot of blockchains and different cryptocurrencies. The majority get a percent of the total volume. The lion's share is absolutely in Bitcoin and USDT.
All right. Fantastic. So I think that is all we have time for now. I think we've gotten through the sort of main bulk of the questions there. So yeah, we've got some sort of last contact information available just on the screen now. But Tom, Emma, Roseanne, is there any sort of final comments that you'd like to make before we round it off?
Just to clarify, the booth number for ICE, our stand is N10 150. So it's 150. So you see a little mistake there, but it's 150. Yeah, guys, thank you for joining. I hope it was very helpful. I think it was informative. It was educational. So if you have any questions, contact me, Emma, Tom. We're also at ICE, as you can see. So let's meet there. Let's catch up. Any questions you want to ask in confidence there, you can come and see us, grab us for a coffee, and we can discuss. With pleasure to meet you there.
Thank you.
Thank you all so much. And thank you all so much for joining us today. We will have the recording of this session available very shortly. And please do go over to our event calendar to see what might be up next. But thank you so much to BVNK for working with us on this. And thank you to our speakers today for all of your detailed sort of insights and answers to our audience questions today. I'm sure it's been of great value to our audience. So I hope everyone has a great rest of the week.
Thank you, Katie. Thank you.
Thanks. Bye-bye.
Thanks, Katie. Bye.